Wall Street giants are spending billions to pull back the curtain on private equity as well as private credit. And at the same time, prediction markets like Polymarket and Kalshi have surged into billion-dollar players, blurring the line between finance and gambling. And as investors demand liquidity, secondary markets are booming and reshaping how private assets trade. So what's really driving this new push for transparency, and what risks are still hidden? And how could all of this transform the future of private markets? Well, joining me to weigh in here at the New York Stock Exchange is Nelson Chu, founder and CEO of Percent. Nelson, great to have you here. Thank you so much for joining me.
Thanks so much for having me again.
Well, when it comes to private markets, especially data, tell me about transparency as we head into year end.
Yeah, I think it's been interesting that almost like the first generation of fintech was all infrastructure related, right? So you had your Plaids and all of that other world, and they really allowed companies to be able to benefit from that infrastructure and build more insight and visibility into whatever else is going on in finance, right? So I think we're sitting on their shoulders as well and being able to deliver more transparency into how the underlying assets are performing, and that has made a lot of traditionally very opaque, very difficult to monitor assets like private credit become much more transparent and visible, and also makes it a more liquid market as a result.
So you mentioned some key